Welcome. My name is Andrew Barron, and this is, well, it depends, the podcast where I present the pros and cons of different financial decisions so that you, the audience, feel better informed when you are confronted with these decisions in your own life. In this episode, I asked the question, should I roll over my current 401k? But before we begin, a short disclaimer. This is being recorded on March 14th, 2023. Please note the information provided in this podcast is strictly for educational purposes only and is not to be considered investment, tax, or legal advice. It is important to consult with a professional before making any financial decisions, as the strategies discussed may not be suitable for you specifically. Some 401k plans allow their participants to roll over some or all of their account balances to outside accounts upon reaching certain age requirements and tenure with the company. This transfer does not impact your ability to contribute to either plan or to receive employer matching contributions in your 401k. First, let's explore the pros of rolling over your active 401k account to an IRA. One of the main advantages is greater control over your investments. With an IRA, you have a wider range of investment options than you do with a 401k, which can be limited to a small number of investment options. This flexibility can be particularly useful if you want to invest in certain assets that are not available through your 401k. Additionally, if you roll over your 401k to work with a financial advisor, you may receive additional services such as taxes and comprehensive guidance that are not offered in 401k plans. Another pro to consider when deciding whether to roll over your active 401k account is the potential to consolidate your retirement accounts before reaching the age of required minimum distributions, or RMDs. RMDs are the minimum amount of money you must withdraw from your retirement accounts each year starting at age 73. With a 401k, you must take RMDs from each individual account you have, while with an IRA, you could aggregate the balances of all your accounts and take the distribution from any or all of the accounts. This can make it easier to manage your retirement income and potentially save you from missed distribution penalties. For those still working at age 73, RMDs from your current 401k plan can be delayed until you retire. This exception does not apply if you are a 5% owner or to other old 401k plans. Of course, there are also some potential downsides to rolling over your active 401k account to an IRA. One of the main cons is that you may lose access to certain investment options that were available in your 401k, such as institutional class shares and loan provisions. Some mutual fund share classes require millions of dollars to purchase, which puts them out of reach for some individual investors, but these are available inside of 401k plans. Additionally, 401k plans may offer loan options, allowing for an additional place to borrow from that is unavailable in IRAs. Another potential disadvantage is that rolling over your 401k to an IRA could make it more difficult to access the funds if you need them in an early retirement age. 401k plans generally allow penalty-free withdrawals after age 55 if you've separated from service, while IRA withdrawals before 59.5 may be subject to a 10% penalty. Lastly, 401k plans may offer more creditor protections than IRAs. 401k plans are regulated by a set of federal rules called ERISA, which fully excludes 401k balances from creditors. IRAs instead are regulated by the states and may only protect a portion of assets from creditors. To recap, pros of rolling over your active 401k include greater control over your investments. Additional services may be provided if you choose to work with a professional advisor. Consolidating retirement accounts before reaching RMD age can prevent accidental penalties from failed distributions. While the cons are losing access to certain investment options or loans available in your 401k. For those looking to retire early, 401k plans allow access to funds at age 55 compared to 59.5 for IRAs. 401k plans may offer better creditor protection depending on your state. Remember, there is no one-size-fits-all answer. Financial planning decisions should not be done in a vacuum, and instead, it can be helpful to consider your situation with an advisor to review your specific priorities. So, to answer the question, should I roll over my current 401k? Well, it depends.